Hello, this is Susan Smith Nash, and I'm going to talk to you today basically about sea changes in oil and gas in the energy industry and the so-called black swan events that have impacted the entire industry to the point that there are just massive changes going on. We're in 2013. These changes probably will extend into 2012, 13, 14, 15, 16, up to 2020 if all the prognostications are correct. So in 2012, the Black Swan landed. And it's not to say that shale plays had not been already in play and viable, but in 2012 something very interesting happened, and that's when the consequences of the success of shale plays, basically horizontal drilling and hydraulic fracturing, it's when the consequences started to really make themselves felt. So essentially, the black swan, which is an a previously unforeseen game-changing event. Black swan in the industry was the advent of horizontal drilling with steerable drill bits and also multi-stage hydraulic fracturing. So the black swan events were the unforeseen and unanticipated consequences of that and of success. So the shale play technologies became real game changers, and those are again the multi-stage hydraulic fracturing along with horizontal drilling. And the gas plays experienced the first success, but we're also seeing liquids rich plays experiencing success. And what happened with the amazing amount of drilling and the amazing number of discoveries and production is that there became a gas oversupply, which resulted in, as you might not be surprised to hear, lower prices. So, black swan swimming around. Just to recap, a black swan is a game-changing event or set of conditions. It's unpredictable, but in hindsight, everybody could say, "Oh wow, I could see that," and nobody really anticipated the actual impact. An example is the Eurozone crisis of 2012, and another one is shale plays, the new production. So, where did we get the term black swan? It's basically from the book by Nicholas Taleb, The Impact of the Highly Improbable, the Black Swan. And a black swan event has a low chance of happening, but the impact can be catastrophic. So here we have the events, and here we have the swan swimming around. So what are U.S. shale plays? Here's a very highly popular map of shale basins of the U.S. And they tend to have gas, but some are liquids rich. They have some are close to market, some are not. Some have infrastructure, some do not. This is not really complete. I mean, we'll say that the Eagleford is not on here, and that's an incredibly important play. But for the most part, this is helpful. This is the Marcellus, and we have other areas, Monterey, which is actually bigger than that. So and we have the Mississippian, which is not a shale. It's not a lime either. It's more like a chert, but it's an unconventional, and some people lump it in there. And it's key. The key thing to realize is that shale is not shale. Shale is often just fine-grained system that could be carbonates, it could be um, arenaceous, it could be all kinds of stuff. So one of the technologies is, with the black swan, is this phenomenon of going away from vertical wells to horizontal. And there are new technologies for finding so-called sweet spots. The original assumption was that everything was homogeneous. Everything's the same, just like this diagram shows. But in reality, it's not. So instead of a sponge, we have like gravel mixed with sand, mixed with shale, which is, think of that. Think of your garden and throwing gravel in there versus a sponge. So one impact has been to grow by acquisition and merger. So why? Because people are eager to get into the game, and the leases have pretty much all been purchased. So there needs to be access to infrastructure and need to partner with entities that have the technological capabilities as the leases, as well as the knowledge and know-how. So here are a couple of examples. Shell bought into the Marcellus. They acquired leases. They didn't do the on-the-ground leasing. And for some people that became a good strategy to go ahead and do proof of concept and then sell out. So what did the early discoveries require? They required vision and capital, both significant. Here's Aubrey McClendon, definitely a visionary. They needed to develop initial idea, their geological, also needed science to determine drilling locations, and above all, technology. It's a long process. And let's look at the original shale plays and the early visionary, which was George Mitchell of Mitchell Energy, and he was in the Dallas area, and he was very bold. And as you can see, this lease map, this is around the Dallas area, it's kind of amazing to see exactly how many companies got involved. So let's look at exactly what is involved in a shale play. You have to have a geologist, you have to have a geophysicist for the seismic, you need to have a well log analyst for the petrophysics, you really need to have engineering for understanding the drilling part as well as the completion, hydraulic fracturing for stimulation. So game plan 1, proof of concept. Drill vertical wells. Test extensively. Then drill several horizontal wells, groom for selling. Sounds like a good plan, right? Well, with the Black Swan, it changes things. Oversupply, low prices, and this unfortunate element of and surprising consequence of heterogeneity, which is there's often a need to refrac, that the porosity is not uniform, and there's consequently pretty intense decline curve. So discovery, why sell? An example is Petrohawk. Well, why? Why not just develop it? Well, you can at your peril if you really want to get into intense, undercapitalized positions, which is never a good thing because it's extremely, extremely expensive to put together the leases and to maintain the leases and to build the infrastructure to drill and then build the gas gathering and that infrastructure, deal with the water, it's on and on, very expensive. So for cash, people have been getting capital, people have been getting into international joint ventures, merging with companies, acquiring companies. So here we have a couple of examples. Sinopec partnering with Devon. People blame Sinopec for Devon's reticence with respect to data anymore. Can't get Devon to really present any place. Anyway, and there's also another example of 25% interest with Chesapeake and Intervest. And so here are Sinopec and Devon. This is what they bought into. In 2011, there were a number of acquisitions and joint ventures, people getting into U.S. shales. I'm talking about foreign nationals. India's Gale Company, UK Mining Company, BHP Billiton, actually they're Australian. Progress Energy Resources, Sasol, South African, got into Canadian shale gas. Petronas got into the game. BHP Billiton bought Petrohawk, so as we mentioned, that primarily was in, I believe, Eagleford. Future, China. China has lots of lacustrine basins and shale, potential shale. So here's one of the reasons why China would be so interested in getting into joint ventures. It's a way to go very quickly one's into acquiring know-how and technology. Statoil, they're very aggressive. Not only are they acquiring in the Gulf of Mexico, they're also getting into shale. So we have acquiring leases, value reserves, partnership consortia. All these different things are important. But let's just jump over here. We're looking at the black swan again. The impact of falling gas prices. The key is to think about, in the terms of black swan, what exactly is the impact of the falling gas price? And as we do so, let's think about basically strategy and decisions. So it's going to make a big difference on how you perceive the value of your portfolio and the kinds of partnerships you're going to get into. So it might require you to take a little bit more conservative approach, at least for a while, and also, of course, diversification is key. So I just wanted to go over the impact of Black Swan. Hope you've enjoyed it.